Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
Well, oil prices have regained some ground, though it seems things could still be quite volatile. Why this rebound, and do you think it'll last?
Well, it looks to me that Mr. Trump's aggressive warnings on Iranian military ship was a temporarily factor to recover oil price. If there is a military conflict between U.S. and Iran, shippings of oils are in danger, which is a positive factor for oil price. But it takes more time, I think, to recover oil demand and price, because fundamental factors like quarantine is still going on, and no more oil storage available are dominating the oil market.
Right. Well, after the hit the stocks on Wall Street took earlier this week on the oil issue, they were back up on Wednesday. All three main indexes gaining in the 2% range. Take us through the global markets.
Oil price up has built Wednesday's U.S. stock market rebound, and this momentum was transmitted to European markets yesterday and this morning. S&P 500 return in U.S. gained 2.3% on Wednesday's market, and European markets also had positive daily returns in UK, France, Germany, between 1 to 2% level in a day.
Yeah, there were signs of a recovery in the Korean markets as well. The KOSPI up by around 1% for the third day in a row, and KOSDAQ up even a little bit more than that. What's the story in local stocks?
In today's domestic market, KOSPI has gained about 1%, and KOSDAQ also had a positive return by 1.4%. Rising oil price and government's emergency package became positive factors in today's market. One thing particular in today's market is domestic individual investors and foreign investors sold domestic stocks. But on the other side, domestic institutional investors like banks and insurance companies bought domestic stocks.
Right. Well, now we have this big story today. The Korean economy, we know now that it shrank 1.4% in the first quarter. It's expected that the real impact, though, of the coronavirus will show up in the second quarter. So talk a little bit about what's being done and what might be done.
Bank of Korea released Korea's first quarter's economic growth this morning, and it was, as you said, negative 1.4%. And it is one of the worst economic growth in a decade. And one thing really scary is that COVID-19's effect on economy is not fully reflected in first quarter's economic growth. So there is a possibility that we will see worse economic growth in second and third quarters. So government's response to COVID shock should be prompt and aggressive expansionary and monetary and fiscal policies.
Yeah, and speaking of those kind of policies, there was the emergency relief package yesterday in the form of a third extra budget. Again, the concern, though, is that it's been there all along, which is the government's fiscal soundness. What do you say to that?
Since government has decided to go to a supplementary budget to finance emergency packages of governments, concerns on government debt is rising again. But we need to reconstruct economic policy target priority under this emergency situation. So it is necessary to place a higher priority on expansionary fiscal policy than restraining government debt increase.
Got it. Well, we'll watch how those policies develop, whichever direction they go. Thank you, Professor Kim, for your insights today.
Thank you very much.